So in a positive move for city gas distribution companies, the government recently increased domestic gas allocation for Q2 to 94% of the full requirement from the 85% in Q1. Now, this increased allocation reduces the input cost since the company now needs to pay less to import higher priced gas. Pawan Kumar, the Director of Commercials at IGL, joins us now to track this and to tell us the impact. Mr. Kumar, good morning and thanks a lot for joining in. Can you tell us first, has the allocated gas volume started flowing in for the city gas distribution sector? And how much from this total allocation of 20.7 MMSCMD are you getting?
Yeah, good morning and thank you for inviting me on your show. In fact, we are getting currently around 6 million cubic SCMD per day, and the allocation has in fact decreased for IGL. Earlier we were getting around 6.5 million per day, but now it is around 6.06. So allocation has almost come down, but it has benefited IGL because earlier we were getting pooled gas at a higher cost, which was around 10.5 to dollar per MMBTU, but now the weighted average cost is around $7.50. So it has significantly helped IGL to bring down the input cost.
So lower amount of gas, but lower prices as well. Right, Mr. Kumar, but the question was about what has happened now. I mean, so there has been an increase in allocation, right? Which will start to happen. So, but that is not starting to come in yet, right?
Yeah, in case of IGL, the allocation has in fact come down. But we have, the long-term contracts at a reasonable price. So we are not using any spot LNG nowadays, and the import gas cost has really come down.
So what is the sourcing breakup? How much is imported and what's the import price and how much is it higher by?
We have long-term contracts in the range of around $16 to $17 per MMBTU, and we are using almost 8 to 9% of this component in the domestic gas allocation supplied by the government.
Okay. There is some gas supply coming in from GAIL as well, right? So what does all of this mean for the unified base price? Do you think that could go up in the near term?
I think the unified gas price might go up from the October. But as we see that the government of India has promised that the gas consumption in the energy basket, which is currently 6.8%, needs to go up to 15% by 2030. And the huge investment has been tied up for the CGD sector. So I am hopeful that the government will take some decision which is favorable to the consumers and to the investment in this segment.
So it was $10 per MMBTU in the first week of August, right? What is it currently, the unified base price?
It is around 6.26.
Okay, and it's expected to rise?
It is expected to rise from October, not immediately.
Okay.
Mr. Kumar, what about prices? Some of your competitors have taken price cuts. Will you also do the same?
See, when the prices were increased, IGL took a conscious decision that we will not increase the prices. So we didn't increase any price after May. And we absorbed the entire hike ourselves, and we reduced the costs and maintained our profitability. Basically, we think that we should encourage the customers and the general public at large for buying CNG vehicles, and we encourage them for conversions so that we have a bigger market. So we have a long-term view so that we don't lose the customers. So since we didn't increase the prices, so we are not going to reduce.
But so you have no room for any cuts?
No.
Or do you have some cushion?
As of now, we don't have any room for price cuts because we are absorbing whatever hike we absorbed, we are compensating that now.
So what does...
And
sure.
Our CNG prices are lowest in the country.
Okay, got it. So what does all of this mean in terms of EBITDA per SCM and volumes? Currently, you're sitting on volumes of around 7.9 MMSCMD. And also your EBITDA per SCM is 8.6, which is I think the highest that you've seen in many quarters. Will it continue to trend upwards? If yes, what would the average be?
It will be around 8, 8.5, maybe 8.6 also. IGL is taking up a big exercise for rationalization of operating expenses. We are cutting our operating costs in a structured manner, and as the sales go up, margins will go up.
Mr. Kumar, beyond here and now, what will happen going forward? Will this 94% allocation sort of stay? Will this grow? Because the industry will grow, right? More volumes will grow. So how will that be met? Do you have any clarity, any roadmap from the government?
See, availability of the domestic gas is limited. Unless the government decides to cut allocation to some other segments, I think it will be difficult to increase the allocation to CGD sector. But as the government is committed to increase share of gas in the entire energy basket, I think they will take some favorable decision in future when it comes.
Which could be? I mean, because you can't, other sectors like power, fertilizer, etc. also, you can't divert and provide here more, right? So what's the slightly longer term roadmap?
Government decision.
Yeah.
It's purely a government decision. What happens is not known as of now, but we are hopeful that something will be done.
So, but why is it lower? Why is the allocation, the domestic allocation, lower for you in particular?
It is around 90 to 91% of our consumption.
So,
see, it was written there that as per availability, it will be distributed. Earlier, it was said that the allocation will be 94%, but in the revised circular, they said that it will be as per the availability of the domestic gas.
So, have you asked the government to increase the domestic allocation for you?
We are always for this.
And anything that you heard from them?
As of now, nothing.
Okay.
All right, Mr. Kumar, we'll leave it there. Thank you very much for your time. Good speaking with you. So for now, more gas. More gas than before, but will it rise further? As you said, it's up to the government, of course. Allocation of gas. 416 on IGL, it's up about 0.4% or so at this point in time. The market is down about, a 0.25% or so. So this is looking like, it's settling down. We have been trading for about 30-35 minutes or so. We're down 50 points. I think market breadth is still positive. 2 is to 1, 2.5 is to 1, 1400 higher, about 550 stocks lower. That's the overall advanced decline ratio on the NSE. So broader markets are doing just fine. Now, almost 8 months after the Vodafone Idea board approved converting dues on account of AGR payment and interest to government equity, the conversion is yet to take place. Sources say even though the Finance Ministry has given the go-ahead, a final nod is awaited from the market regulator. Ashmit is here with more details.
The government had pitched the telecom relief package introduced last year as a catalyst for turning distressed telecom sector into a sunrise space. Now, while the industry has showered praise, one key component of that relief package is yet to take effect, even as we near nearly 12 months since that cabinet nod. Now, that key component has been the scheme allowing telcos to convert interest on deferred spectrum payments and AGR dues into government equity. Now, Vodafone Idea opted for the same scheme on January 11th of this year, 2022. Now, the net present value of interest dues would add up to a little over 16,000 crores. However, nearly 8 months post Vodafone Idea's decision, government is yet to convert outstanding dues into equity. Now, this equity conversion would turn the government into the telecom company's single largest shareholder as of Jan 2022. That would translate into a holding of 35.8%, which is higher than either of the two remaining promoter groups. Now, this was anticipated to be a long-drawn process. Any such conversion would require the nod from the Finance Ministry. Vodafone Idea is listed, so it would also require the SEBI nod and finally the approval from the DoT. Now, in March, Vodafone Idea had pleaded before the government to fast-track the conversion process. The company had claimed that it's in talks with various funds for raising funds, in fact, and that equity conversion would help in mobilizing them. Now, at the time, the company was seeking to raise as much as 20,000 crores from promoter groups and external investors. Now, with little movement in April or May, government sources revealed in the month of June that the equity conversion may be completed ahead of the 5G auctions. Now, we had learned at that time that due diligence had almost been completed and that SEBI's final approval is awaited. Now, in July, Finance Ministry granted its nod, pointing at a possible conversion prior to the 5G auctions, but the auctions began as scheduled on July 26th, with still no movement. Now, while the auctions were underway, the telecom minister revealed that technical issues had come in the way and that conversion will take more time. So, are there concerns that the government has on its mind? Well, the company has admittedly struggled to raise funds for its operations from either external investors or the promoter groups. The telecom's customer base has also been bleeding, has been eroding, with lakhs porting out almost every month. And these concerns are taking a toll on the company's finances with mounting losses. Now, speaking of the subscriber base, the first half of 2022 alone has seen the company lose over 88 lakh subscribers. The 12-month period ending with the month of June 30th of this year saw Vodafone Idea lose as many as 1.66 crore customers. And for the 15-month period beginning 1st of April 2021, the company saw over 2.7 crore customers porting out. In fact, the last time the company added subscribers was way back in March of 2021. Now, expectedly, the financials are nothing to write home about. Since the merger, the cumulative losses are pegged at 1.68 lakh crore rupees. The subscriber base has fallen from 422 million to 240 million. That's down by 43%. Meanwhile, the total debt has crept up to nearly 2 lakh crores. Now, the effects of this was visible in the recently concluded 5G auctions. Vodafone Idea's total bid of about 18,800 crore rupees looked bleak against Airtel's bid of 43,000 crores and Jio's bid of 88,000 crores. Now, the nearly 8-month delay in government action is at odds with the recent pace that has been shown by the DoT in execution of spectrum auctions and the fast pace of assigning spectrum to the telecom companies. Now, while the government leaders continue to cite issues, no clarity has emerged on the nature of such issues and the possible timeline for execution.
Okay, thanks a lot for that. Well, let's do one thing. Let's also get back to talking about some stocks that are moving around. Affle India is a stock that's having a big run this morning. And if you're wondering why, Goldman Sachs has initiated the coverage on that stock with a buy rating. And they have a target price of $14.95 on Affle India. The stock is up 5% right now. Now, the reason they're saying is that there is a massive rise in internet, smartphone and e-commerce penetration, and Affle India will be a big beneficiary of that. They expect Affle to grow its revenues by 32% compounded over FY22 to FY25, and it has multiple moats, whether it's patents, platforms, a first mover advantage in India. Not just that, it's focusing on high growth category clients like the e-commerce space, the ed tech space, the food tech space. So these are some new and high growth markets that Affle India is contributing to. So this is one stock that is on the rise this morning. But Chennai Petro is another one that's giving it competition. Sonal is here to tell us why. Sonal.
Well, it is an important update coming in from Chennai Petroleum, where they say that board has approved a joint venture with IOC and some seed investors. And this JV is formed to actually implement their 9 million metric tons per annum of refinery project at Kaveri Basin. Remember, it had been pending for a long time because of financials only. The total investment is 31,580 crore rupees, and seed equity investors would include the likes of Axis Bank, HDFC Life, ICICI Bank, ICICI Pru and SBI Life. And out of this, 2,570 crore rupees will be invested as form of equity investment by Chennai Petro itself. This is one piece of news which is positive for the company. Now, also remember, last week, the company was allowed to resume production to 100% in one of their refineries by Tamil Nadu Pollution Control Board. Earlier, it was restricted to 75% by that particular board. So that will increase their production capacity as well. On the back of this, the stock is up 12.5% this week. It's up around 20% this month. And this year itself, it has seen gains of 210%.
All right. Sonal, thank you very much for that. That's Chennai Petro in focus right now, 4% higher. I mean, just put up Rbl Bank, which continues to move up and up, 108 rupees now. We were discussing this earlier. So that's doing very well. And Tejas Networks is another one which has come up very sharply. It's up 8% and huge volumes on this one. Kalyan Jewelry is up about 5.5%, 82, and so on and so forth. So this is looking The broader market is looking just fine. 2:1 advance decline. Nifty is corrected a little bit more. I mean, we're down 62 points now, 17,516 on the Nifty. So I think on the index, at least, we are at the day's low. That's about 1/3%. Now, there's been a big rise in oil prices, over the last couple of days. For example, the prices are back above 100. Saudi Arabia, the energy minister of Saudi Arabia hinted at a possible output cut. He basically says that fundamentals and actual situation on the ground don't match. And when OPEC Plus meets on the 5th of September, they may have to consider a cut in output to rebalance the market. What could this mean for Indian companies? We have Rajesh Kumar Srivastava, Director Exploration at ONGC, who's joining us to take some questions. Mr. Srivastava, great to have you with us here. Thank you for joining us on the program. So the direct question, of course, I mean, what comes to mind is what happens to windfall taxes, right? At the next review, with a meaningful jump that we've seen recently, they could be revised higher, in your opinion?
Hello.
Yeah, Mr. Srivastava, if you can hear me, can you hear me?
Last point I could not hear.
No, what happens to windfall taxes? At the next review, when the government reviews this next, because of the recent sharp increase in prices, could this be reset higher?
I think the mechanism that is inbuilt by government is a periodic review. And we believe with this review, there would be further downward revision in the SES, or what we call SAED. And that's what we hope for.
How come so, Mr. Srivastava, when prices have moved up, right, not down, and they've already come down from what, $40 a barrel to what, 24 or so. You're saying at the next review, most likely, if prices stay, international oil prices stay where they are, the revision would be downward?
Yeah, I believe so.
So that what is the per barrel tax that you're paying to the government right now?
As I say, the net outgo on reference to the imposition of the SAED was something around $40. That was further revised to downward, and that got down to by about $5. And this is something similar. We hope that this would be done in the next round also.
So you're saying $40 was brought down by $5. On an average, it's about $35 per barrel tax that you're paying to the government right now. And if the oil prices have gone up, right? So you don't expect the tax to be revised higher?
No, right now, even though there is an upward revision, but the general trend, what is anticipated is to stabilize somewhere at a lower price.
Okay.
So that is a reason I am saying that it could be revised further down.
Okay,
Mr. Srivastava, we had an oil...
there are other facilitation or other mechanisms are being asked from the government by other operators. So I believe that would also be taken into consideration. Yeah.
Right. No, so we actually had a expert from the oil markets in the morning with us who thought otherwise. He thinks, the paper markets, financial markets are not accurately reflecting prices. Prices should be, potentially could be 30-50% higher from here. I mean, so it's anyone's guess, right? It is your opinion, Mr. Srivastava, that prices will head lower than higher?
Yeah, it's my opinion.
Okay. Have you had any discussions with the government at all for scrapping these taxes entirely?
These things are already taken up by our CNBC with the ministry in different forums. And we also are in process of proposing some other mechanism rather than this imposition of tax directly, and this could be through some other routes also. So we are working on those recommendations, and that we would be putting forward to the Ministry for consideration.
So what are those recommendations? What are the other mechanisms that you're proposing?
Rather than this direct tax on the production front itself, there could be another mechanism where this money could be utilized for some other projects in a different way.
Okay, and you've put that forward to the government. Any response there?
No, that's what I'm saying. We are working on those paper and we are likely to put up those for consideration.
Okay. Is there a possibility also of windfall tax on gas production anytime soon?
Ma'am, last time when we discussed about this, so suddenly it came as a bolt from the blue. And in the gas, I would not like to be speculating again, but I don't think that would be a positive step.
Oh, absolutely. For the company, absolutely. Mr. Srivastava, there is general scarcity of gas, right? I mean, we just had the management of IGL, Indraprastha Gas, with us, who was saying that although the allocation to the sector has been increased, they are still only getting about a little over 90% of what they require. Could you give us some sense of what is the situation in terms of consumption? Are you getting more requests from GAIL for more supplies? Just provide us with some perspective.
I don't think so. I would be able to give any kind of direction in this. Only thing what I can say is on the positive front, ONGC, by taking a stake in gas exchange, and we have been able to get some more new discoveries. I believe there is likely to be more gas output from the ONGC side in the coming time, and let us see.
Okay. Can you give us some guidance, both in terms of crude production, gas production for FY24 and 25? What are you looking at?
In terms of our drafted way forward for the next short-term outlook, we are trying to increase at least 15 to 20% in oil, as well as something around 25% in gas.
That's for FY24, is it?
Yeah.
Okay, so 15 to 20% increase in oil production and 25% increase in gas production is what you're looking at. Okay, and is there a likelihood of the government introducing a cap on gas prices? Is that something that we're looking at as well?
All those things have been tried earlier, and recently, with reference to those marketing and pricing freedom, I believe that has paved the way for attracting other foreign investors as well, and with the aggressive OLP rounds wherein we are taking up more acreages, capping mechanism, I believe, would not be the desired kind of thing.
Mr. Srivastava, what would oil and gas throughput for this year look like? Could you give us a number?
For 22-23 you are asking?
Yeah, 23, yes, 23, FY23.
FY23. So that's what I said, what we are looking for, a nominal increase this year, but by the next year, our oil and crude output would be something around 15%, and increase to the gas would be to the tune of 25%.
15?
From the current 2021, yeah.
So 24...
This year it would be nominal.
Yeah.
This year it would be nominal because we have just came out of all those COVID pandemic-related effects, supply chain disruptions, and working on those pipeline replacement projects. So we are a little bit somewhere similar to the 21, but in the next year, we will be increasing by about 15% in oil and 25% in gas.
Just another question, if you would want to answer, Mr. Srivastava, how much out of our import basket of oil, right, which is we import 80% of oil needs, how much is Russian oil at now? I mean, there were reports that said about 20-25% of the import basket is from Russia now. Could you confirm that? And what is the latest in terms of the price that we are getting?
No comments on that, please.
Okay, all right. Mr. Srivastava, thank you very much for your time. Good speaking with you. Appreciate you joining us with that perspective. Thank you. So FY24, by the way, is when they will see a big jump in terms of output, 15% in FY24. This year it will be very, very marginal, almost flat. And of course, in terms of pricing, you know, it's not in their hands, really. It's up to the government, both on oil and gas. And That's, of course, what the market does not like, and why the stock finds itself trading where it is. Given where oil prices are, it should be far higher, but it's a question of pricing, and that is not something which companies themselves decide. We'll take a very quick break here. Up next, Mitesh Thakkar will join us for some technical trading ideas. So we'll turn our gaze back to the market, which is, by the way, right now coming back. I mean, sharp moves. We were down almost 50, 55 points. We're down 22 now, so there is some pullback which is underway. Okay, welcome back. We've got the market, which is down, 20 points, 17,554, and, volatile, but not large moves at all. 20, 30 points up and 20, 30 points down, and we've already seen a bunch of those. Mitesh Thakkar is with us to run us through what he's making of things. Mitesh, are we going to see a decisive move today, or going to remain like this? Your sense?
Prashant, my understanding is that we might actually have a subdued session. I think, we've talked about the fact that markets are possibly getting into consolidation. So idea is to buy on declines, but we might not see a big move today. Having said that, I think on the stock side, I have one buy and one sell call. Emphasis is seeing some kind of negative continuation. So that's a sell with a stop at 2280 for targets of around 2200. And Nippon Asset Management India, I think that's showing good traction. It just needs to clear the 200-day average, which is at about 318.7. So let's keep a trigger of 320, buy about 320 with a stop at 314 for targets of 335.
Okay, well, thanks a lot, Mitesh, for that. Well, the Adani Group is, of course, in the news. It has indirectly acquired more than 29% in news broadcaster Ndtv. The Adani Group's unit has also announced an open offer for an additional 26% stake at 294 rupees per share. This open offer will cost Adani 493 crore rupees. Yash is here with more details. Yash, can you take us through how the deal is structured and what's next?
Well, absolutely, Sonia. So let me first start by talking about the shareholding pattern of Ndtv itself. Promoters Prannoy Roy and Radhika Roy, they hold a little over 32% in the company. Another promoter entity, that is RRPR, that held around 29% stake in Ndtv. Now, it's this 29% stake which was owned by RRPR, which has been acquired by another entity called Vishwapradhan Commercial, which is a wholly owned subsidiary of Adani Group. Now, interestingly, Adani Group announced the acquisition of Vishwapradhan Commercial itself minutes before they announced the acquisition of that 29% stake belonging to RRPR in Ndtv. As far as the deal structure itself is concerned, Vishwapradhan Commercial, that entity has converted warrants issued by RRPR into the complete ownership of RRPR into Ndtv, which is 29% stake. Now, because this stake now comes to Vishwapradhan, and Vishwapradhan is an entity of the Adani Group, that is an indirect holding of Adani Group in Ndtv. What next? Of course, because it's triggered the 25% mark on shareholding and voting rights, the transaction has led to an open offer of additional 26% stake. Now, that will essentially be at a price of 294 rupees, which is a discount of about 25% to the price of Ndtv shares as far as today's trading session is concerned. Importantly, 3 points. What lies ahead for Prannoy Roy, for Radhika Roy, which continues to be the promoting entity? Either if they feel that it's a hostile takeover, they can take a legal recourse against it. Second option could be that they could just tender in their shares as far as that open offer is concerned and exit Ndtv. And the third one is they can choose to co-promote Ndtv along with the Adani Group.
Okay, all right.
Yash, could you tell us who are the big shareholders of Ndtv, and what's it looking like with regards to this open offer?
So, Prashant, we've got some interesting details in terms of the shareholders, the large shareholders of Ndtv, and that itself tells a story. We are not suggesting that this is a sure thing to happen as far as the open offer is concerned, but it will certainly make the open offer process simpler if you go to read the shareholding. There are 3 sets of shareholders, and I will name them. One is Dhrolia Agencies, second one is GRD Securities, and the third one is Adesh Broking. Now, these 3 entities together hold about 5.8% stake when it comes to Ndtv. What's interesting is that all these 3 entities or shareholders of Ndtv have interlinked directors amongst themselves. So there are common directors between these 3 shareholders. What that sort of could indicate is that if one entity agrees to participate in the open offer, one can assume that the other two entities would also or could also be in favor of participating in that open offer. The second interesting bit is another shareholder called Lts Investments, which owns a sizable stake in Ndtv. The stake quantum is 9.75%. Now, interestingly, Lts Investments, which is an FII, also holds a stake in various Adani Group companies. I mean, case in point, it holds 1.69% stake in Adani Enterprise, about 1.09% in Adani Power, 1.63% in Adani Transmission, 1.27% in Adani Total. What that essentially does is, because it holds stake on both sides, it is a possibility that Lts Investments could also look at, participating in the open offer. Not suggesting that this is bound to happen, but this certainly gives a hint that it could make the whole open offer process a little simpler. And if these two sets of shareholders do participate in the open offer, then Adani's stake in Ndtv could actually go all the way to 46% with these two sets of shareholders.
Okay, all right. So hostile takeover it is, perhaps. Thanks a lot, Yash, for joining in. Let's get you some exclusive corporate opinion now. Lata caught up with Hina Nagarajan, the MD and CEO of Diageo India. She spoke about the company's deal with InBev and the consumption pattern amidst high inflation. Listen in.
The deal that we just announced a few months ago, we had said that we'll close it by end of September. So work is progressing on track and we hope to complete it by September. Okay.
Yeah. Well, now I want a consumer question. Yeah. What's doing well? Is it the mass brands? Is it the premium brands? Especially premium, prestige and above. How are they doing?
So, like we said in our new strategy that we will deliver double-digit top-line growth for our premium brands. We have so far delivered that mandate. The brands have been doing very well. I would say that we are beginning to see some slowdown, especially at the lower end, because of inflationary pressures and everything that we've talked about today. So definitely we see some slowdown in uptrading at the lower end. At the top end, we don't see slowdown, we don't see a reduction in consumption, but we are seeing a slowdown in repertoire drinking. So, people are cutting down on repertoire, but not really compromising on their brands, etc. So, looking forward, I would say I'm optimistic that with people returning to bars, restaurants, and us being able to celebrate face-to-face, we'll have a good season and we'll continue. And we're committed to delivering our guidance.
Right. No, I think that part of the economy is doing very well, the return to normalcy. But inflation is not going away. How is it affecting you? Is it continuing to be a problem? Because, if you look at the headline wholesale price index and consumer price index, it seems to have peaked off. But how is the experience at home?
We've not yet witnessed inflation reducing. We are still seeing pressure on our raw materials and packaging, etc. So I think this is going to continue for a few quarters. We are hoping it'll come down at some point in time, but I think the next couple of quarters we continue to see pressure.
Okay, we'll slip into a quick break on that note.
Okay, we've got the market, which is come back quite sharply. I mean, just down 11 points now, 17,566 is where we are trading at. Now, we got an IPO which is opening for subscription today, and it is India's largest airport service aggregator platform, Dreamfolk Services, which is floating its public issue. The company intends to raise up to 562 crores through its public offer of more than 1.72 crore equity shares at the upper end of the price band of 308 to 326 rupees per share. Liberatha Peter Callan, chairperson and managing director at the company, is now joining in to take some questions. Liberatha, thank you very much for joining us. Good to have you with us here. Prashant this side. Can you first of all very simply tell us what exactly do you do? What is your business all about?
So Prashant, I'm sure you must be also using our services, and many more people are using our services. So what basically we do is, any traveler who is actually using his credit or debit card to access the airport lounges, this program is incubated by Dreamfolk. So we are the one who actually started this program, wherein giving a benefit, which is a lounge benefit, now I would say airport services benefit on the credit and debit card. So the way it works is that any customer who actually walks into the lounge and taps his card. So once the transaction is done there, and the customer gets a free access to the lounge. However, we invoice, to the bank or the credit card company for the payments, right? And they pay Dream folks, and we keep a delta, and then accordingly the lounges invoice Dream folks, and we pay for the number of transactions which happen at the lounge. So this is the business model, and this is what we have done.
Who pays you, Libratha? I mean, so the customer walks in.
The customer walks in, the customer gets a complimentary access.
The card is issued by the bank, right? And
yes.
they tap the card, they get access to the lounge free of charge. So where do you come in?
So we manage the complete end-to-end program. So when I say we manage the complete end-to-end program, so for example, Prashant, when you enter a lounge, when you tap your card, now to identify whether your card is eligible for the free access at the lounge. Okay, so there are a couple of checks which happens. So the first check is whether your card is eligible. Okay, so there is a bin level check which happens. And then there is a second level check which happens is that, you know, what are the utilizations which has happened to your card? For example, there are different tiers of cards which are there in the market, right? So for a platinum, maybe there would be 2 per quarter or 4 per quarter, depending on the card variant. Some cards are unlimited. Now, also to keep a check that, you know, what are the number of transactions you have done? So all this check actually happen on our system. So that is the tech what we have built in. Okay.
So yeah, got that. We got that. So what percentage of your business revenues comes from lounge fees? Is it entirely from lounge fees, or do you have other streams of revenues as well?
So presently it is purely from the lounges. When we started this business 9 years back, the complete business focus was only on the lounges. Okay. However, now we also have the other services added in our portfolio as well. However, we have just started this after COVID. So we expect to see numbers growing in the other services in coming years.
Okay. And, you know, the reason I ask is because in, say, FY20, you had about almost 360, 370 crores of business that came in from lounge fees. That has fallen to about 270, 280 crores. But of course, the whole aviation industry itself has gone through a bit of a slowdown. On an average, what kind of growth are we looking at over the next few years?
So we are looking at a growth of 40% right now.
Okay. In your top line?
This is the industry growth right now. So. Okay. No, the other numbers I would not be able to.
What is? Could you tell us how much do you make per passenger?
So right now the cost is around 880 rupees per transaction or per customer, you may say.
Sorry, how much?
But these are the blended pricing. What I'm talking about, 880 rupees
per customer.
Per customer, yes.
So you get paid 880 rupees per customer.
Yes.
Okay, okay, fair enough. And this is the average per customer.
Average blended cost, because the pricing differs in the lounges from metro cities to tier 2, tier 3 cities. Again, the domestic lounge pricing differs and the international lounge. So this is a blended price, what I told you. Would
there be, I mean, is there great entry barriers, or could this not be? What are the risks, Libratha? I mean, could the banks do this themselves? Could they directly interact with lounges around the country? Why would, I mean, you know, if you're a bank and you're offering your customers a certain privilege on certain cards, would you be able to continue to collect these kind of monies from the bank for this per customer, or would there be pressure?
Sure. So I'll just start with, from the time when we started. So it's not that, there were no other players. So there was a global player in the market. And I think that's a differentiator what we created in the market in terms of the solution what we brought, right? When I say differentiator, because we introduced this with, benefits on the same credit and debit card. So that was one of the biggest differentiator, and that's the reason why we stand. When you talk about, is there an entry barrier? I think the moat what we have created for our business in terms of the solution. Today, we have a hybrid solution. We started with the credit and debit card. We also have our own plastic, which is also issued by banks and non-banking clients as well. We also have our digital app where we have deeply integrated with the banks and the credit card companies as well. And we also have a one-time voucher, which is issued by airlines and OTAs as well. So I think this is a hybrid solution, what we have created. The other side, we also have the marquee clients who have been working with us for past 9 years, and they understand the solution, what we bring. Apart from that, the services, what we render, because it is not about just the solution or, the hardware which is provided at the airport, but I think managing the complete program in terms of, training the lounges, ensuring that every customer gets the right experience at the lounge. Secondly, the customer escalations, which are very, very important for the bank or the card networks. And all these are directly managed at our level, and because we also have our in-house customer care, wherein a helpline number where the direct card holders can reach out to us for any
problem that you see. Okay, got that. Got that. One risk, Liberata, is that your balance sheet looks a bit stretched. Your working capital looks worrying. Receivables are higher than what it was in FY20 at a time when your revenue was much higher. Your operating cash flows are also negative. Your payables are extremely high. So can you tell us a little bit about that? Do you see further pressure on your balance sheet and working capital pressure?
So Sonia, actually, if you see the changes, this were actually during the COVID time. And, we actually have given this, I would say, a preference to our clients for the, payment periods were extended for them. And this was one of the reasons, because yes, during the COVID, every industry was suffering. And I think it is, as a partner, it is very important that how you support your clients and your service providers as well. So as a company, we actually decided in that way. But right now, if you actually see, we are coming to the same terms of what we have our payment agreements or contracts with them, and we are in line in the same way what we were in the pre-COVID time.
Okay.
What is this money going to be? I mean, this is the OFS, right? 33% dilution.
Yes.
Why are you doing this at this point? And what is the objective?
So Prashant, if you have seen that, we are the market leader standing with a 95% market share. And yes, in India, with the professional connects, it was a bit easy to start this business because you already know the industry well. But it's very important right now for also to grow globally as well. And that's what, as a company, we see that, we have a lot of potential to grow global. So one of the reasons is that, as a listed company, the credibility, what you get is very, very important. And I think that will actually help us to grow global. So this is one of the biggest reasons. Second reason is that, we have seen that we have a lean team of 60 people. And to have the right professionals working with you, it's also very important to take care of your team members. And I think ESOP is the right way to incentivize the employees. And I think as a listed company, they would also get the right dilution as well. Secondly, the most important thing is that in terms of the volumes, what we drive to the lounges, overall is around 67%, and major locations is more than 80% as well. But, the end customer is still not aware about Dreamfolks as a brand. So I think these are the reasons that, why we want to go for IPO. And yes, I think we thought that this was the right time where we see that, yes, the travel is also coming back.
Okay, well, all the best. And thanks a lot for joining us on the show. And we'll speak to you again very soon once the listing happens. That's Dreamfolks. They've already raised about 253 crores from anchor investors. The business model, though, looks a bit weak and vulnerable. But in any case, that's the latest one on Dalal Street. Let's do one thing. Let's wrap up on Bazaar. On that note, lots of trading ideas lined up on Chartbuster, so don't go anywhere.